All right, it's Wednesday, May 1st, and this is an end of the day and first day of the month SPY recap. Today on the daily chart, Federal Reserve Day, we end up with a two-down shooter bar, meaning we take out the low of the previous day, and as it turned out, even though we rallied a little bit after the Fed announcement, we came all the way back down and closed near the lows. So this has the look of a shooter bar, which you expect to follow through lower tomorrow, and we are still holding with our two-up weekly failure that came above the high of the previous week on an inside bar here, but then immediately came down through the halfway point of that bar and has a target to the low of that bar by the end of the week. We still have a couple of days to go. We'll see what happens. We also have now a key reference point, this purple line. This is now the open of the new month right here. So our new month starts. We have a red month from last month. There's a bias to test the low of that month at a minimum. And if we can get down there, we have targets below. And, we have now that purple line, which is the open of the month. So at this point, if we're going to want to just consider this a big pause month in this big uptrend and things start higher, we're going to have to get above the open, which in this case, it could be something tomorrow that kind of moves up above that open a little bit in here, but really we want that daily chart to have a two-up day at this point. And then we'll be kind of in the 510 area. This opens around the 501 area. That gives us a little cushion to feel comfortable that our bias goes to the upside, going forward. So even though that's a key line, now with the daily chart fixed in place, we want to see kind of a two-up daily bar, and that'll be the sign. So we could come down a little bit, in the days ahead, maybe not hit targets, come back, maybe we'll get a two-up signal at that point, and then, that might go above the open of the month, green, and then at that point we can still be biased to the upside. But for the short run, we want to see this high taken out somewhere up here. Other than that, if we stay below there, we're going to stay biased to the downside for a number of reasons. Number one, the daily chart's down and heading lower. We have targets down here. The weekly chart still has its target down here, and we're looking at a monthly chart that still, has expectations to take out that low until proven otherwise, even though we could just pause in here and eventually start up. So that's kind of the bigger picture look at things. In terms of today, I discussed early on that the opening price between the blue lines was the pre-market range. Opening price action started down with bar number one, a little bit of a shooter bar, followed through on bar two. I bought some puts here. I described how at that point I kind of watched it. It came down, and then once this didn't follow through much lower, I kind of broke even on that trade. I then discussed I'm going to watch how the Fed kind of what the Federal Reserve does and watch it from there. And obviously you had this big move up at that point. But I also kind of described in this video midday when I took a break-even trade that sometimes the Fed, you get that big move up and then it can come all the way back down. And I was still biased to that viewpoint. And what happened was when it came up here very strong and immediately had the reversal up here, I actually decided to buy some puts again. I bought the 505 puts at this point at 333, and I exited most of the trade near the lows here at 525. I think it closed at 530. Yeah, they're at 530 is where the position closed. So, I took just given my analysis, and this is why I kind of do this day after day, so I have a bias. I'm still biased to the downside, given that weekly chart, is still projecting to head down there. And I know on these Fed days, sometimes you get these, wild swings. So my bias to the downside. Now, if it would have come up, it had the opportunity. It came a two-down failure on the daily chart where it came up, and it came up through the midpoint of that bar. It was kind of right at that area, right around here if I hit the button. But, at this point, you're getting there with just an hour to go in the day versus kind of, on the weekly chart, we take out that high quickly and then start down quick early in the week. We have plenty of time to get down there. So when I see these outside days where you get like a two down failure that goes to the high the previous day or vice versa. I like to see that kind of move early where you get down there, then you head up through the midpoint and you have all day long to work up there. So anyway, it could have continued high. There's no doubt this could have continued higher and the whole picture would have changed. I mean, this weekly chart would have had a big hammer bar look to it. Let's say we closed up here, and then I would have expected this 2 up week to maybe be heading up there for the rest of the week. We just kind of came down to the midpoint of this weekly chart. It didn't really follow through. That's the kind of look it had. But as it turns out, price decided to reverse. And, the reversal here, it was pretty strong to the downside. So I just jumped in with some puts. I wanted to see what would happen. And obviously, we closed near the lows of the day. And we'll see if that follows through tomorrow with some of these, expectations that I'm talking about to hit the low of the week and the low of the month and everything else. This is the daily chart here. So, this is the whole month last month. So you're kind of thinking that this is just kind of maybe a 1, 2, 3 pullback in the daily chart. And we make another leg down. That's what's unfolding now until proven otherwise. So, today was a chance to maybe prove it otherwise if we would have had an outside day to the upside, but it didn't unfold. And it was just a typical Federal Reserve day that I've seen many times before where you get a volatile movement one way only to go the other way. And we had the bias the other way until it changes. So, that's why you could have maybe been aggressive. I'm not going to call that a typical trade. It's just something I wanted to do given my bias and, just patiently waiting and kind of seeing this kind of, failure up here. So anyway, let's just see where things go tomorrow. More normal 15-minute price action will form. First bar, pre-market highs and lows, and then your first move and your secondary move. Those are the things I look at. So anyway, we will see what unfolds tomorrow, but as of now, expecting lower. We're going to have a 2-up day at the moment, for me to get comfortable that we could be reversing back to the upside.